Good morning once again, ladies and gentlemen. My name is Hilary Asimwe, and I am for Britam Asset Managers, Uganda. I welcome you all to today's training. I think we can start. It is exactly 9 a.m. So I am your moderator for today's training, and we shall be looking at how to pick the best investments in these uncertain times. So the topic for the day is investing smart in this economy. And our speakers for the day are going to be Mr. Kasolo Ronald and Mr. Vernon Kiguru, who is our acting investments manager. So the agenda is going to be at 9. Of course, people are logging in, and we shall have opening remarks. At 9:10, we shall pray and do the presentations. I'll take the prayer. Then at 10:30 to 11 a.m., we shall have questions and answer session. And after that, we can be closed and depart at ease. So at this moment, I'll take the prayer. Sorry about that. At this moment, I'll take the prayer. Lord Father, we thank you for today and for each and everyone's life. We ask for forgiveness where we could have fallen short of glory. We ask for your intervention as we take on this training. May it be of value and ultimately impact positively on our investors' lives. In Jesus' name, we've prayed. So at this moment, I will call on Mr. Ronald Kasolo, who is our General Director for Britam Asset Managers Uganda, to give his opening remarks and also carry on with the meeting, with the training. Thank you so much. Ronald, you're welcome.
Thank you, Hilary. Our investors, esteemed clients, and everybody on the call, a very good morning to you all. I would like to thank you for making the time to join us for this online workshop where we'll be discussing investing smart in this economy. And before I do anything else, I'd like to first and foremost thank you for the business patronage. It's always a pleasure to serve you, and we'll continue to provide you with financial security every step of the way with our investment and protection products. We're committed to continue offering you a seamless service as well as superior customer experience, and certainly we value the relationship. As a business, obviously, we'll continue to thank you, and we'll continue to do our best to ensure that we're able to meet your expectations. As a business, we've done very well, given the growth in our wallet share. You'll see the same in our presentation, but also in terms of our strategy for 2021 to 2025, we've continued to reposition the business around the customer, and going forward, we are then positioned as a truly customer-centric organization. I'll be able to share some of those highlights again in the presentation. As I turn to today's topic, which is investing smart in this economy, we thought it was very prudent to begin a conversation on the topic, given the developments in the economy, and specifically the volatile macroeconomic environment. Recently, we've seen an increase in the cost of living, and this cost of living continues to rise and is expected to continue in the same direction until 2023. And that has proven to be challenging in terms of how we're managing your investments, but also bearing some consequences in terms of how we're able to meet your investment objectives. So looking at the recent rise in the cost of inflation, is then the cost of living is then been driven by a number of a combination of factors. We're seeing some global issues. We are seeing the depreciation in the Uganda shilling, as well as the recent rise in food prices, given the drought that we witnessed in Uganda. For the global issues, it's really been the geopolitics, the war between Russia and Ukraine, and what that has done to global food prices, as well as fuel prices. And that has affected the economy by over the imported inflation, which has also been a very big challenge. So because of that, we are then seeing a global fear of a recession. And already when you look at our economic performance for the quarter ended June, we saw that the economy is slowing down for Uganda. We had a reading of 4.9%, much lower than the 13% we had in a similar quarter in 2021. So given the risk of a recession, together with the response of central banks globally, we are then seeing a tightening of financial conditions, which is weighing down on economic performance. And this is expected to continue until financial year 2025 to 2026. So in light of those developments, we thought it was very important for us to then cast a spotlight on some of those issues, as well as then have a discussion around what we are doing as a business to ensure that we're able to preserve the investments from the perspective of purchasing power, as well as continue to explore opportunities to provide a real return on investments. So turning to our agenda for the day, we'll look at a brief introduction to Britam for some of you who continue to know the business, but as well as to provide some highlights on what the business is up to, Britam as a company, and we'll look at the investment opportunities, and this is where we'll really focus on the our approach to investing smart in this economy, and then we'll conclude with some information on the Britam Unit Trust Funds, and we'll get into the Q&A session. So in terms of our vision really is to be a leading diversified financial services group with interest in insurance, asset management, banking, and property. So that is our vision as a business, and we strive to provide financial security with our investment and protection products. So the group has a geographical footprint in the whole of East Africa, and down south we are in Malawi and Mozambique. Those are 7 countries, and within the group we are proud to mention that we have the largest insurance company in the region by market capitalization. This is the market capitalization of 851 billion as at the period ended at 31st December 2021. This is our structure. So the holdings company has 12 different wholly owned subsidiary companies. We can see these are split across the different business lines. Under insurance, we have 8 subsidiaries. Under asset management, we have 2 of them. I would like to mention that for asset management, Uganda was the first business to expand out of Kenya. And so that comprised the second business under asset management. Property, you can see there's 1 subsidiary there. And then we also have 1 subsidiary under portfolio investments to make it a total of 12 wholly owned subsidiaries and Britam holdings. I've mentioned how we are reorganizing our business around the customer, and the goal really is to position the business as a customer-centric organization. And this is happening at 3 levels. The first level is really forging strategic partnerships through our partnerships and digital segment. And then we're also optimizing our approach to the customer by organizing the business under 2 segments. Here we have the retail segment as well as the corporate segment. And then lastly, we are unlocking the next tier of customers through our emerging consumer segment. So again, this is part of our 2021 to 2025 strategy, and we'll continue to really ensure that there's customer centricity by focusing on these different foundations, as you can see on the left part of the slide. On the investment side, we will then have a shift in investment strategy, again focused on those different segments I've mentioned, and that will be supported also with international expansion as we drive international growth. On the right part of this slide, you can see the EPIC, our desire to provide a seamless customer experience with our EPIC focus. EPIC represents employees. This then focus on the internal customers. When they are happy, they're able to serve the external customers very well. We have the partnerships. This is really a focus on the various stakeholders and how they can support the business. Then innovation through our various digital initiatives ongoing. And then the most important one here is the C, which is the squared. So this is squared because then we intend to put customers first, and we continue to do that. And in putting them first, we then expect in terms of our conduct to be able to treat them fairly. And that is the EPIC squared. So you can see that as a business, we are committed to a customer-facing approach, and then we are committed to offering a superior customer experience through our EPIC squared approach to dealing with yourselves. We look at our business model. This is really organized around the 6 capitals, and again you can see that across all these capitals, the most important one here that I would like to focus on is the human capital, where as a business we have 800 plus dedicated workforce, and this is supported by over 2,000 financial advisors. And the various wholly owned subsidiary companies have dedicated boards, and that brings on board the experienced leadership team with then a clear focus on ethics and values for the business. So this is our business model. The goal is that with the 6 different capitals, we are then able to focus on achieving sustainable positive outcomes for our various stakeholders, as you can see on the right part of the slide. If I move on to just move on to the next slide. Yeah, so if I move on to our shareholding, this is very important. Over the years, we've seen the shareholding of the company change. Obviously, the business is listed on the Nairobi Securities Exchange for the last several years. And we have a number of shareholders. I'd like to start with the largest shareholder in the business, and that owns 18%. This about 18%. This is Africa Invest. So Africa Invest is a consortium of various investment arms of different European governments. So we have DEG, which represents the German Investment and Development Corporation. That is for the German government. We have the Netherlands Development Finance Company, FMO, representing the investment arm of the Netherlands government. And then we have Propaco, which is the French Development Agency, representing the investment arm of the French government. So that is about 18% of our business. The second largest shareholder is Swiss Re. And I know all of us know Swiss Re as the largest reinsurer in the world. They own about 16% of the business. And then in third place, we have IFC, a World Bank, and that owns about 9% of the business. So in totality, we have 40% of our business under the three largest international investors, led by Africa Invest in the first place, Swiss Re in the second place, and then IFC, World Bank, in the third place. Then the balance of shares is what is owned by various individual and institutional investors through the Nairobi Securities Exchange, given that I were listed on that exchange. So this is again our footprint. I talked about this. So you can see that the whole of East Africa, we have a presence, including South Sudan and Rwanda. When you move down south, then we have a presence in Malawi and Tanzania. You can see the different entry dates in each of those countries. For Uganda, we've been around from 2010, which is now about 12 years. And then obviously for the different countries, we can see here the youngest is Mozambique, Tanzania, and Malawi, where the entry was done in 2014. With our strategic plan, there are initiatives to get into more regions, mainly the West and a bit of other parts of Africa. But that again will be communicating as and when those plans are firmed up. Continuing with the group structure, key to note here is that Britam Asset Managers is under the Asset Management Division. But then I talked about the insurance business, which is the largest in terms of market capitalization in the sub-Saharan African region. And then we have a property business, which complements our product offering for the various investment products we offer for the asset management business. And then lastly, we have the banking, given the interests in the housing finance group in Kenya, and then equity finance group, again, in Kenya. At the bottom is then a listing of the various subsidiaries. So for Uganda, maybe provide a little bit of background. We started the business in 2017 with the launch in July when I joined. So to date, we've made about 5 years. And as I've mentioned, we've continued to grow our wallet share, and we've seen the business grow well, as demonstrated by the growth in assets under management, given that now we have over 900 billion of your money. And for this, we are really grateful again for the business patronage. So this money is invested in various products. We have the unit trust funds, which is our flagship retail product, but also we have private wealth management, a bit of property advisory, and then the pension solutions for both retail and institutional investors. The investment business is supported by over 70 people. A part of this is a team in Uganda, and then supported by the team in Kenya to ensure that we're able to tap into the diversified skill set of the business as we run the day-to-day operations. This is the ownership structure. So you can see we have the 40%, and then the balance of the shares that are then on the Nairobi Securities Exchange. You can see that 25% is the local institutional investors, and 30% local individual investors. So this gives you a view at the shareholding for Britam Holdings as a company. And I've mentioned Britam Holdings is owns 100% the Britam Asset Managers subsidiary. So the Britam Asset Managers is a wholly owned subsidiary of Britam Holdings. And the other thing is that given the entry of the three largest shareholders, we've seen we've benefited from being able to benchmark mostly the compliance practices, so that has strengthened our business. And on the investment side, we've also been able to benchmark investment strategy, given the global experience of those three shareholders. And that has also provided us some guidance in terms of the products that we're able to structure, and that will continue to provide you. We're a regulated business. We have three regulators. We have the capital markets. Then in 2011, when UBRA came on board, that is the next regulator for the pension sector. And then we also have the Financial Intelligence Authority, given the amount of money that the business manages and moves around in the financial sector. So we have the FIA also provide both on-site and off-site surveillance of the business. So the combination of the over 900 billion is then split between retail and institutional clients. For the retail clients, for those who are wondering, these are really individuals, companies, religious bodies, schools, NGOs, government parastatals organized under retail. And for the institutional, it's largely the pension schemes. Alongside NSSF, we have various occupational pension schemes. Those have grown in number, and we are able to provide our investment advisory services to them in a bid to meet various objectives for the beneficiaries, who are the pensioners in this case. So that forms the bulk of our institutional clients. Under there, we also have a bit of what we call discretionary accounts, those non-pension mandates that again comprise a bit of assets. So we're able to again have that organized under institutional clients. In terms of products, for the retail business, we have the unit trust funds, which I mentioned are our flagship product, but we also happen to have a very unique a license for a special unit trust fund called the Fixed Income Money Market Fund. So unlike the conventional unit trust funds, the Fixed Income Money Market Fund provides certainty in terms of what rate you're earning and the period you're investing. While the traditional unit trust funds are usually floating products. You earn daily, and then there's entry and exit at any point in time. So we saw that there was a market appeal to have some certainty around returns and certainty for a defined period of time. So we worked with our regulator, the Capital Markets Authority, to have a special license that then enabled the business to launch this product that allows you to know exactly what you're earning over a defined period of time, organized under the collective investment schemes, meaning that then you also benefit from the tax exemption, which is currently in the law. For the institutional products, it's mainly the pension offering, where we manage the various occupational pension funds, where we manage the endowment funds in the country, gratuity funds, for those that do not have occupational pension funds, and then different funds that are open-ended, as well as the fixed income money market fund that's also organized for the institutional clients. Our approach to real estate is a focus on two areas. where we're able to get into development funds, those that are getting into greenfield opportunities. And for some of the investments that we have is the income fund. For example, the first project was the Britam house, where we are currently housed on plot 4 Kibua Road. But we continue to work with our customers to then be able to support on property investments. So between Uganda and Kenya, we have over 2.5 billion US dollars. So we're able to leverage that financial muscle to continue to work with different issuers of both debt and equity opportunities, so that we're able to invest in those, but also to utilize that muscle to extract superior investment returns by leveraging our overall holdings in the region. So with that, we've come to the end of the introduction to Britam, as well as have some perspective on why we thought it was very important for us to then have a conversation on investing smart in the current difficult economic times. So I would like to invite my colleague, who is also your dedicated investment manager, Vernon Kihuguru, to then take us away on the next part of the agenda, which is investment opportunities.
Thank you, Ronald. And once again, good morning to all our members and all the participants on the call. My name is Vernon Kihuguru, the investment manager at Britam Asset Managers. And I know some of you have been very, very eager for this section, so we will dive into it. This section will deal with the investment opportunities, going across our theme of how to invest smart in this economy. Ronald has already given you a bit of a background of who we are as a company, but also at the beginning of this presentation, he was able to give you an overview of where we are in the economy. So the reason why we thought it very pertinent to have a discussion like this is because the last 2 years for everyone have been quite difficult. Difficult in the sense that they have been very uncertain. We started off 2020 with a pandemic, something that had not been experienced in most of our lifetimes. We then went on to see how the economy, not only locally, regionally, or globally, started to recover based off of such a disruption. Then we went into a global economic war that's happening between Ukraine and Russia, that then saw a lot of effects spilling over to us. A lot of people did not know how important some of these trade partners are to us as a country. But we have now been able to see what effects those have had, especially supply chain disruption. And now we are also starting to see how we have controlled that, both politically, socially, and economically within the country, and then how we are now going to move forward from this. Because at the end of the day, we do have to recover from this. We have to move on. We still have to make money for our households. So how are we going to do this utilizing companies like Britam that offers services that would then reduce that gap that has been created over the last couple of years. So moving on to the start of the presentation, like any other decision that you make as an investor, as an individual, as a parent, as a child, as a professional, you need to be able to answer certain questions when you're making certain decisions. So the 5 W's come into effect here: who, what, when, where, and why. These are things that you need to be able to categorize yourself into when making certain decisions. For this particular webinar and in this conversation that we're having today, it is how to invest. So the beginning is to answer the question, who am I and where am I within that journey? So we have an illustration here on this page on individual investor life cycle. So when you're looking at yourself, you need to be able to determine where you fall. So we have been able to categorize this in terms of age to start with. where do you fall in terms of your age profile, and what should you be doing right now to be able to have a financially free and stable life? So between your 20s and your 30s, which is normally characterized by the beginning of your work cycle, this is the stage that we call accumulation phase. Your accumulation phase is when you've just started working, you've just started earning a salary, most likely you've just started paying rent. This is the stage when you are outside of university, or you have, or for those that don't go to university who have started their professional life, what we refer to as your adult life, and you have certain obligations that you have to meet. But also this is the stage when you have just started, normally at a lower level. Obviously, there are different situations where some people are a bit luckier and they get to have these opportunities a bit early. But between 20s and 30s is normally when this is categorized. So what do we want from this phase? This is when you should be accumulating, when you should be collecting. This is the stage when you should be using your salary to invest in passive income, with the hope that your passive income will then become your salary. So this accumulation phase is when you should be putting aside savings, then being a little bit more frugal with your spending. And this is obviously within your means, because like I said at the beginning, there are quite a number of obligations that come at this particular phase. And then you would then go into the phase between your 40s and your 50s. So this is after you have worked for a significant amount of time, normally on average about 10 to 15 years, when you now start to consolidate. So now you are consolidating your investments. Here is where you're able now to invest in some riskier investments, some larger investments, because you will have accumulated that money between your 20s and your 30s. And between your 40s and your 50s, you're now able to invest in certain asset classes that will then spearhead you into your retirement phase, which we categorize between 60s and your 70s. So your 60s and your 70s, which is normally when now you have stopped working and you are expecting now to handle your retirement phase of your life. This is now called the deaccumulation phase. This is when you should now start drawing back on the money that you will have accumulated and consolidated into investment opportunities. And basically, you should be enjoying life at this point in time. On top of that, you should also be able to have a safety net, which is money that should be able to take care of all your necessary needs. Any health requirements that might have come at this time. We all know between the 60s and 70s is when we are very highly susceptible to our bodies just degrading, and we need to be able to have enough money in our pockets to cater for ourselves. What we intend to create here in terms of a lifestyle, in terms of a paradigm, is that we're able to support ourselves because of the decisions that we made earlier on in our lives. So moving on to that, then we need to answer a number of other questions when we're investing. So as I had mentioned, who and when has now been answered. Now, where, what, and why are we investing? So just to start, the most key, the key element that you have to ask yourself always is, what is my risk appetite? What am I willing to risk? That is in terms of monetary value, in terms of time, also in terms of sacrifice. So do I have a low risk profile? That means that I want to invest in safer things, things that are stable. Do I have a medium risk appetite where I am between low and high, basically because of what my options are currently? You might have quite a number of options, but they're also still uncertain. Like I mentioned, we are living in quite uncertain times right now. So a lot of people might be falling in the medium category, or is my risk appetite high? So this is normally for the risk takers, normally individuals that have quite an amount of disposable cash lying around, money that you're willing to risk at the highest level. And of course, this is also money, high risk also comes with high reward. So you have to look at those options when you're looking at your decision-making process. So that is within determining what your risk appetite is. Very key in the investor life cycle. Secondly, what are my liquidity needs? So how soon do you require access to the funds? And this also comes into the age bracket. So are you of the younger generation between 20 to 40, where you might have an extra 40 years that you're expected to live? Are you between the age of 40 and 50? Or are you above 60, where you're in retirement and you need cash immediately? So you have to look at your liquidity needs, and this takes into account your inflows, which basically could be your salary, some income that you're already earning that can sustain you, and then you can use some of your extra or disposable cash to save. Or are you at the point where you have stopped now earning maybe an official salary from a corporate job, and now you need more inflows than you have more outflows than you do inflows? So that is also quite key to determine what your liquidity needs are. The third thing is the expected return. So what do I want to earn? Do I have a particular target when I'm investing? Do I want to buy a house? Do I want to buy a car? Do I want to go on holiday? Do I want to pay for my my children's school fees? Or do I want to save for retirement? So within the products that we have, or within the advisory capacity that we have as Britam, this is where our professionalism comes in, where we're able to determine for you what you should require, where you tell us what you require, and we work backwards to help you determine what it is that you should be returning on a yearly basis from certain investments that you're earning to be able to meet whatever goal you have. One thing you would definitely compare this to is inflation. That has been a very huge question and a conversation over the last 3 to 4 months. And this is because for one of the very first times as individuals within this market, or as individuals in Uganda, we're able to see the impacts of inflation firsthand. And I'll say that because previously, we've had very numerous changes in inflation over the past couple of years. Previously, it was affected mainly by the election cycle. So every election period, you would normally see inflation spiking. And that was because you would have the government coming into the market to borrow quite a bit of money to be able to meet certain promises that they had made, big developmental projects, or to finish up some of the things that they had been mentioned in their manifesto. So we would see inflation going up because of some of these factors. This particular time, as Ronald had mentioned earlier, our inflation, which is mainly imported inflation, has been affected by majorly 3 things. We've had supply chain disruption over the last 2 years, mainly due to COVID and the restrictions. We've had disruption from the Ukraine war that has majorly affected oil prices, and we've seen that from what we've seen in the pump prices and the Shell and the Petros and all these other gas stations that we use. I even had a joke the other day when somebody said that what this inflation has shown us is that we can all actually afford V-Power. So that was something that previously people were scared of buying, but now at 6,000 levels, you can now see that you can actually buy fuel at those levels and you can actually drive your car. So that is what the definition of inflation is, and that is where we are as a country. Inflation is quite high. So you have to be able to determine, after inflation, what am I actually earning? Because inflation, just broken down into simple terms, is an increase in prices. The price of what you used to buy last year is different from what you're buying now. So if you're investing in something and you're looking at a return, so if you're looking at a return, whether it be in property, in bonds, in products that like the ones Britam offer, after you get that return and you remove inflation, what are you actually spending on? Because that money that you're going to earn, you're still going to have to buy the same things that you bought before. And if their prices are higher, that means that your actual return or your real return is what is left. So you also need to be able to determine what that is. In terms of investment horizon, what is your investment horizon? Do you want to invest for 1 year, which we normally term as short term, on the medium term, which is between 2 to 5 years, or do you want to invest long term, which is above 5 years? That should also come into handy when you're picking the particular product that you want to invest in. And lastly, who are you going to invest with? So normally we ask ourselves, where are we going to invest this money? What are the opportunities within the market? So as Britam, as one of your fund managers, Ronald had mentioned, took some time to explain to you who we are as a company, what our goals are, our values, our strategy, That just explains to you where our experience comes from. 50 years of cultivating financial professionalism, as well as determining how we can provide these services to you. So that is very key in determining who you pick as your investment partner. At the end of the day, we are partners. You are trusting us as well as we are trusting you to be able to make good decisions, and you are trusting us with your money to be able to give you those returns. So those are the key questions that you should be asking yourself before you start to make any investment decisions. Next, we shall go into where you can invest. So now we've talked about what should inform our decision-making process, what we should be looking at when we are starting to invest in products. Now let's look at where you can invest in. So this is specific to Uganda and the opportunities that we have. Of course, there are multiple investment opportunities, and one of our goals as Britam is to be able to bring these opportunities to the market. Ronald had mentioned that we are one of the companies that has the only license for the fixed income money market fund, and that falls under the fixed income segment. So under the different asset types, the main asset classes that we normally look at are fixed income, which are interest-bearing assets. These are normally assets or investments where we earn income from them. We invest in them and we earn income. It's more of an issuing of debt to somebody, and then they owe you more money than you have given them back. On the equity side, these are opportunities where you get a chance to own a part of a business, and then you are rewarded either with dividends or by selling that company at a higher value than you originally bought it. These two are the main investment opportunities that we have within our country, fixed income and equities, and they're the ones that are more readily available. Some of the other asset classes are commodities. So these are physical goods, which you can, with an end use that you can invest in. Most popularly, you've seen that Uganda became a very big gold exporter. Other commodities include salt, sugar, agricultural products. Those are also part of your investable environment. On the alternative side, which is just outside of the traditional space that we work in, there is property. As Ugandans, even just culturally, property is very, very important to us as individuals. And it has now also started to become very commercial in that people are now utilizing that previously would just own property to hold or to have on a farm, but now we are starting to see more development within the region on property, and that is in owning land or on owning buildings. And then lastly, we have private equity. So private equity is an opportunity to own a private business as opposed to completely selling your business. In a private equity opportunity, you'd be able to own a business. And here also, you'd be able to be rewarded with interest or dividends. So moving on to now a breakdown of the key assets that we can invest in. So we have two different types of assets. We have financial assets and we have real assets. So I'll just start with the real assets. So real assets, if you just put it down in simple terms, are the ones that we derive from physical properties. So these include the buildings, the land. Those are those real assets. They're defined by those products that have productive wealth in the society. Some of their characteristics is they are less liquid than the financial assets, and this is mainly because you would have to sell a real asset to be able to realize that profit. So just in simple terms, if you were to sell land, you would have to find a willing buyer and then be able to exchange that. In terms of value prospects, some of them lose value over time, some of them gain. And the products, like I had mentioned, they produce real products or services to the holder. In terms of financial assets, which is what we deal with at Britam, they are defined as an allocation of wealth among investors. In terms of liquidity, they are easily convertible to cash. So you're able to access your cash quite quickly, and this is because they're easily tradable. There are indices and there are markets that have been set up to be able to make this easy. They provide continuous growth. So with financial assets, depending on the type that you pick and the ones that we deal with here with Britam, you cannot lose value with these products. They provide continuous growth, and you can use your income to purchase from the financial assets to purchase real assets. Then now we're going to break down some of the main investment opportunities, which is the fixed income products in Uganda. So there are quite a number. There are quite a number of fixed income products in Uganda, and they range from low risk, which is all the way to the left on this slide, to high risk, which is on the extreme right. So if you look at low risk, you're looking at treasury bills and bonds. So treasury bills and bonds, these are securities that the government issues. So basically you lend money to the government and the government promises you to pay you back more. So they pay you some interest, which we refer to as a coupon. And then at the end of that period of investment, right now you can have an investment from 3 months all the way to 20 years. And that investment, then at that maturity, they will give you back your principal or your face value that you'll invested. These are referred to as risk-free. They generally do not possess any risk because they are guaranteed by the government, and they are referred to then as risk-free assets. When you move then to slightly riskier assets, but still low risk, you look at the bank deposits, microfinance and SACCO deposits. So for some of you who are in SACCOs, normally you invest this money on a periodic table, and then periodic time rather, and then you're able to access some of these benefits of a SACCO organization where you can get loans, as well as with a bank. These are also low risk, where your default risk from a bank is quite low. The expectation is that banks are not going to close in one day. So these are also referred to as safe assets. And then where you find us, right in the middle, where we have high liquidity and then risk-adjusted returns, which are quite high, but then we still consider ourselves low to medium risk. These are the money market funds that Ronald will then describe at the end of this presentation, and also the wealth management accounts. So you're able to get that low risk profile where your money is quite safe. You're able to just continuously grow your accounts, but still getting the advantage of high returns within the market. Then you move to the riskier assets, which is cash. Holding your money in cash in your wallet, under your bed, in your mattress. This is your cash. High liquidity, you're able to access it at any point in time because it's accessible, but there's no return at all. Then you have loans to your friends. And this normally happens. This is quite common with investors and individuals. You normally have your friends who come to you, they ask you for some money, you give it to them based off of your relationship. This is quite risky. It normally operates outside of the financial system. It is high risk, and normally it's categorized by default payments or delayed payments. So that is not something that we recommend. And then lastly, on the extreme right, we have commercial papers and corporate bonds. These normally possess the highest returns, but also possess the highest risk. So commercial papers and corporate bonds, this is a way that you can raise money as an individual, as a corporate, outside of bank loans. So you come to individuals, you come to the market, and you ask them to trust you to lend you money, which is normally cheaper than what the banks would offer. And then they promise then to be able to pay you back. This is based on the performance of those particular companies and the trust that these companies will then meet their obligation to be able to pay you back. So again, this table moves from the left to the right in terms of low risk to high risk, and these are the opportunities that we currently have within the Ugandan market. So moving on to your equities. So equities, again, a major asset class that we are key professionals in as Britam asset managers. Equities and stocks, these are shares that are issued by a company which represent ownership in that company. So you normally have a company that will have listed. Most recently, you will have seen that MTN, our biggest telecommunication company, listed in November of last year. Before that, we had Umeme, the biggest and the sole distributor of electricity in the country. Before that, We had Cipla, Quality Chemicals, again, the biggest manufacturer of pharmaceuticals. And then before that, Stanbic. So there are quite a number of companies within our market here that are listed, where you can actually go and be part of the ownership structure of that company. You go and you buy shares, and legally you have ownership to that company. The way the company pays you back, again, as I mentioned earlier, is every year if the company has done well and they have decided to issue a dividend, you are then party to that dividend, to their profits, where you are given a share of that based off of what you had bought. And then you are then able to utilize that for other opportunities. You can also sell some of your shares that you had bought originally, either at a higher price where you can make a profit, or at a lower price. Now that is determined by the movement in the stock price, and that is also determined by fundamentals of the company, but also business operations and what is happening within the market. So those are publicly listed equities. I also mentioned private equity. These are private companies where you're able to invest for a particular period of time, normally associated with the risk of investing in that company, and then you're able to earn a certain return from that company. Within that period of time, you do have ownership of that company, and those are all listed on a stock exchange, especially on the publicly listed equities, like the Nairobi Stock Exchange, the Uganda Securities Exchange, Johannesburg, New York Stock Exchange, etc. All this information is public, and you're able to access it the same way we are as investors. Lastly, just to touch on equities and the importance of investing in the equities is why you would invest here, which is the next slide. Thank you. So why would you invest in equities? There are quite a number of reasons why. Equities are quite high risk in the spectrum. One of the things that you're not able to determine or able to control is the stock price. There are quite a number of things that affect the stock price that could either make it go up or it could make it go down. So that makes it very, very high risk. But on the other hand, equities are also an opportunity for you to get very high return. So as we've been mentioning, Ronald will break down our products and where our interest ranges are. Property is one of those asset classes where you can earn over 20% in a month. And that can depend on the movement in the stock price. But timing that opportunity is quite difficult for individuals. So that is why we have a dedicated service, a dedicated team that deals with equities. They continuously track this to be able to find opportunities, entry points and exit points where our clients are able to benefit. So you're able to have that price appreciation, that large movement where you're able to earn quite an amount in a short period of time. Liquidity. You're able to get liquidity from this opportunity where you can cash out in very efficient markets and access your cash. There is return enhancement. This is also part of the diversification process where you should not hold all your eggs in one basket. So this gives you an enhancement on the already stable return that you might be having. And obviously diversification. It's always good to spread your investments so that you do not lose based off of certain factors. I'll just give you an example. What this period, these last 2 years have taught us as investors, but also as an individual, by myself as an investor, is that we saw how certain sectors were crippled completely by the introduction of the pandemic. By going into lockdowns, we saw the services sector take a very, very big hit. The agriculture sector and the industry sector were supporting our economy for the last 2 years, but there were services that included tourism, accommodation, transportation, all those things that were severely suppressed by the stringent conditions or under lockdown were affected. So we saw a lot of businesses closing, a lot of people losing money, a lot of people losing their properties, their homes to loans, and that was because of lack of diversification. What diversification does for you is it allows you, and this we're going into the next slide, what diversification allows you to do is to spread out your risk so that you are not caught off guard when certain situations happen within the market. So as I had mentioned, the role of diversification is to completely spread your risk. Within the public and the private equities, you can invest in those securities across different companies. So how do you diversify under equities? So you can buy a stock of telco, which is MTN. Then you can buy a banking stock, which is Stanbic. You can buy insurance like Britam, which is a listed company. Manufacturing and agriculture like East African breweries, which is also doing quite well. And then even you have the agriculture sectors or the electricity generations sector. So you can invest in different sectors that you feel will give you enough diversification that will not be affected by one particular event. On the fixed income side, you can have a mix. You can have some cash that you keep in the bank. You can have some short-term investments that you have in the unit trusts. You can have some treasuries with the bonds, but we'll also explain how the products that Britam offers give you this diversification in the mix that we have and how we invest. And then lastly, in property, you can also diversify in the segment. Sometimes you can have an office, residential and industrial space. This gives you the chance to spread out your risk within property. Commercial space obviously is the most attractive, but sometimes residential space, because at the end of the day, people have to stay somewhere, might be the most attractive for you, or you might then diversify into office space or industrial space like warehouses. So all of that information we give you as clients. So lastly, what is the way forward? This is the last slide within this segment. Where should we invest and what should we be looking at? So one of the key things to figure out, especially with financial assets and the ones that we provide as Britam, is what we want you to do is to have in the back of your mind, is that if you do not figure out a way to make money while you sleep, and that is your passive income, there might come a day when you start to lose money, when you start to lose sleep because you're looking for money. So what we are trying to do is to be able to bridge that gap. We want you to have this passive income. We want you to be able to work now for your active income, and then later for your passive income to work for you. So for those long-term investors that will look at all those factors, risk appetite, horizon, time period, the choice in investments, for those long-term investors who have an eye for a future and appetite for risk, if you have a high risk, we normally encourage you to then go into equities. Equities, you have to be a bit patient because they are quite volatile, so the prices go up and down. But within those fundamentally sound companies that we research and we suggest and we recommend, we have a long-term standing on those, on our research, on our analysis, and we believe in the opportunities that those create. For investors who are a bit risk averse, which is you have less risk, a less horizon, you have this cash, we encourage you to buy fixed income products. So these are the ones that have more of a short to medium term horizon. You're still able to now look at opportunities within the market to be able to get enhanced returns. So some of these returns are quite high despite the time horizon and the type of product. And also you're able to access your cash. So at the end of the day, you need to be able to access your cash for whatever reason that it is that you need. And we are very glad to be able to provide opportunities that deal with all of our investors' needs. So that brings me to the end of our presentation. I thank you for the participation and for paying attention, and will be available during the questions and answer phase. And now I will hand it back to Ronald, our General Manager, to conclude with our products. Thank you.
Thank you, Vernon. And we've had a spotlight on the macroeconomic environment, as well as some color on the various asset classes, as well as a good understanding of where exactly then we're able to make investments within the various asset classes that have been described. So moving on, Vernon mentions the opportunity for diversification and why it's really important. All of us will remember in the lockdown, and those who did not have cash or near cash investments, it was really tough to survive from a liquidity perspective. And this is really because in Uganda, we invest in 3 areas. Most of us are involved in farming, whether it's animal husbandry or crop farming. Most of us are involved in transport, and most of us are involved in real estate, whether it's apartments or various sorts of construction. So we noticed that in the lockdown, some of these opportunities, which are then categorized under the hard assets or the raw assets, because things like agriculture, the produce would fall under real assets. Things like property, again, would fall under real assets. The same thing applies to transport. So we've indicated that they have features of liquidity, and we saw a case in point during the lockdown, because with the transport restrictions, it was very hard then to extract value from farming activities. And those of us who have invested in various vehicles, with the restrictions, of course, it was very hard to have any sort of income. And same thing applied to property, because then we saw most of the tenants, again, unable to meet their rental obligations. So in times like this, when we're having a volatility in the macroeconomic environment with the rising cost of living, it's then very important to diversify, and it's very important to have near cash investments. And some of the near cash investments that, again, Vernon has indicated, one that really stands out is the unit trust funds. Under near cash opportunities, we have the deposits, whether it's on a current account or on a fixed account. We have treasury bills, which range from 6 months, 3 months, 6 and 1 year. And then we have the unit trust funds. So the unit trust funds are special because first and foremost, it's a collective investment scheme where contributions come from various investors with a common objective. And depending on what the objective is, the funds are then invested in a portfolio of financial securities. The portfolio of financial securities can comprise of listed companies under the equity fund, can comprise of treasury bills and bonds and fixed deposits, depending on really the type of unit trust fund that you're investing in and the objective you're trying to meet. That will then inform the underlying investment opportunities. But they are really organized around 2 major areas, which is unit trust funds focused on listed companies. Baron has mentioned some of the companies that have been listed on the Uganda Securities Exchange over the last couple of years. But then it can also be interest earning focused funds. Under that, we have the money market fund, which is for those that are investing under a year. Under that, we have the umbrella fund for those that want to invest beyond a year and are willing to have their funds, money put away for a longer period of time for more returns. But also we have the fixed income money market fund for those that want certainty in terms of how much am I earning over my investment horizon. So if I'm investing for 3 months, I would really like to know at the end of the 3 months, how much am I able to earn. But also the fixed income money market fund provides some flexibility because you're able also to take out payments on a monthly basis without being penalized. And that's within the structure of the fund. So for example, you could say that maybe every month you want interest to be returned to your account, or a portion of the initial contribution together with interest to come to you to be able to meet certain obligations. That is also possible within that fund. So we see that it carries a bit of flexibility in addition to offering certainty. The unit trust funds and the governance structure where Britam Asset Managers provides the investment management services, who look out for the opportunities, undertake research, and make the investments, while we also have a custodian that will hold the underlying investments. And that, in a way, provides a bit of good governance. Yeah, then on the top of the governance structure, we have the trustee, and the trustee is the most important party in the governance structure, because the trustee supervises, the fund manager supervises the custodian to ensure that the operations of the fund are within the regulatory requirements and are within the obligations as put within the trust deed and rules. So unit trust funds, again, I'll continue, have some more attractive features. The most important one is the tax exemption. I'll be able to show you a comparison so that you see why with the tax exemption on investment, tax exemption, the income coming to the customer, you're then able to have better returns compared to the other alternatives. Because I've mentioned in these times, you need to focus on cash and near cash opportunities. So then we'll cast a spotlight on how then the comparison between the Britam unit trust funds compare with, for example, the fixed deposits, and again compare with, for example, placing money away for a longer period of time, going into treasury bonds. That is investing beyond 1 year on the side of government debt securities. The number of other advantages, this is really economies of scale. Minimum investment amount is 100,000. Again, that is pooled together with the other investors, and that is invested together. So with the pooling of funds, that allows for some lowering of costs. So somebody who is investing 100,000 earns the same as somebody who is investing, for example, 1 billion, because the costs are standardized, and someone who has a low amount of investment is able to have the same advantage because of the economies of scale. Professional management is key, that I've emphasized. Liquidity is another important feature, because you're able to come in and come out. For the ones that have certainty, the fixed income money market fund, we're able to build in monthly payments. So that also, in a way, provides for liquidity. So when you look at the macro expectations, we see that the economy is going to be performing below the long-term trend until financial 2025-2026, meaning that with that uncertainty carrying on, inflation expected to average 7% as we come to the end of this year, and as we get into next year, to be between 8-10%. So we see that with a slowdown in economic growth, and then a pickup in inflation, and with that expectation going on, it's then very important to continue to look at opportunities that are cash or near cash, and hence the case for unit trust funds, because then you have the liquidity, and then because of the professional management and the way they are structured, you're able to achieve consistently high returns because of the really investment strategy that the business undertakes to ensure that the performance is good. So as I talk about performance, our money market fund has returned 11.5. The umbrella fund has been returning about 11.8. And then the Britam fixed income money market fund has been returning about 10.75. And that is net taxes. And how that is comparing to what is available in the market, we just move to that. This is the governance. So before I show you that comparison, I'll just show you a bit of the snapshot of the companies. So we see that Britam Asset Managers, the fund manager. We have the regulator, who is the Capital Markets Authority, the trustee, that is the supervisor, and ensures that the various service providers meet the obligation, but also undertakes inspection on the fund, just to ensure that it really is operated in line with existing regulations. We have our auditor, who is a PwC, and then the return is 10 to 12%. It keeps fluctuating, apart from the fixed income money market fund, where it is fixed at the moment 10.75% net. And then we see that there are different limits coming from both the CMA and UBRA. So for example, at the moment, for pension schemes, they can only invest up to 100% in the unit trust funds, up to 30% in the unit trust funds, while for retail investors and other non-pension clients, you're able to invest up to 100% in line of existing laws. So if you look at the current composition of the investments for the unit trust funds, these disclosures you normally provide to our customers. Treasury bonds account for 71%, and then we have bills accounting for 9%, and then we have fixed deposits 11%. So you can see that there's a bit of diversification even in terms of investment strategy, because we understand, given the liquidity needs of the product, the need for a convenience being a key feature, customers are coming in and out. At any point in time, there should be a money available to meet those obligations. On the other hand, money is then optimized to extract higher yields. And that's why you see 71% of the funds actually invested in treasury bonds. And that, in a way, provides the balance between liquidity and then the need to provide good returns, which is a key feature, because we've really seen that unit trust funds provide better returns compared to other to the alternative short-term investment opportunities. So this is the Britam Money Market Fund. Is open-ended. Interest fluctuates daily depending on market performance. At the moment, it's trending 11.5. I indicated a bit on the umbrella fund, that's about 11.8 at the moment. And then turning to the other investment solutions, we also organize these same products around foreign currency opportunities. So for those that are invested in, would like to invest in dollars and Kenya shillings, we're also able to provide that through our Kenya office. Looking at the fixed income money market fund, it's really the same features, just that the certainty, as you can see, the different months there, and obviously the quotation for rates applicable to different tenors. What's important is that it's organized in a tax-free environment. So investments, as they're being done, they benefit from a tax exemption. And then when the interest income again is being distributed to the customer, there's a benefit of the tax exemption. So that allows for some room for the business to have better returns. So now we'll look at a money market securities analysis. And here really is an assessment of how various money market rates are faring. So we'll start off with the deposits. At the moment, if you take the period ending of September, so we can see that deposits, if for 3 months, the rate average general in the market is 9%, 6 months is 10%, 1 year is 11%. Now, obviously, we understand that deposits are subject to withholding tax of 15%. When we net off that, we said the net returns then range between 7.6 to 9.3 after taxes as at the end of September. If we apply the same analysis treasury bills at the end of September, the 3 months closed at 9.3%, 182-day bill 11.8, and then the 364-day bill 14%. When we apply the applicable taxes on bills. We know that withholding tax on bills is 20%. Again, we said those rates come down 7.4 to 11.2. So when we cast this against the performance of the unit trust funds, we've seen that at the moment, the money market fund is yielding 11.5, umbrella 11.8. So that at a net tax level, the unit trust funds actually are performing better, with the exception of the fixed unit trust fund, because for 1 year, the fixed unit trust fund is yielding about 10.8. Yet we see that the rates on the 364-day have been picking up above 14%, and that places their net after-tax return over 11%. So really, this is the basis for us to then say that given the tough economic environment we're living in, with the rising cost of living and the same expected to escalate, it's then important to diversify in a number of investments, and unit trust funds is one that we would like to present to you for your consideration. So with that, we'll then get into the Q&A session, and I'd like to hand over to my colleague, Hilary.
Thank you so much, Ronald and Vernon, for those beautiful presentations. So thank you so much, guests, for attending in big numbers. So we are going into the Q&A session. We have had questions coming in. There are quite many, and we're going to read one by one. The respondents to the questions are going to be our presenters still, that is Ronald and Vernon. So Ronald is going to take most of the questions, and Vernon is going to take questions to do with buying of stocks and bonds. So how do I do this now? So I'm going to be reading questions so that then Ronald can answer, and those that are supposed to go to Vernon, they will go to him as well. The first question for you, Ronald, was from James. Would like to know the difference between unit trust funds and wealth management fund. We shall do 3 in a row and then respond, then do the other 3. So the second question was from Mrs. Rebecca. What are the risks involved in investing in the money market fund? And the third was Susan. What is the Britam customer protection limit? Banks have 10 million in customer protection otherwise. So this is about how investors' money is really protected. Then for Vernon, we shall have from Susan, how do you buy and sell shares / stocks of companies? Then we shall also get from Herbert, why is it that financially sound companies like Umeme, MTN have their share prices too low, actually below their IPO? So Ronald, you can take those, then Vernon, then we can read the rest. Thank you.
Thank you, Hilary. I'll start off with the first question. What is the difference between unit trust fund and the wealth fund? So I've mentioned that unit trust funds are a collective investment scheme where money is pulled from various investors with a common investment objective. And the pooled funds are then used to purchase a portfolio of financial securities, depending on the type of fund. For example, if it is the equity fund, money will then be pooled and then it will be channeled into various listed companies. In Uganda, we talked about likes of those that have recently been listed, CIPLA, MTN, Stanbic, and the rest. If it is a money market fund, And then for that, the underlying opportunities would be the fixed deposit, as you saw, treasury bills and bonds to provide returns, while the fixed deposits are providing liquidity. If it is the umbrella fund, we then see more bonds compared to the other short-term assets, mainly the deposits and the bills. So that's the description of any trust fund. It's professionally managed. You have a fund manager for the Britam unit trust funds, that is Britam, and then you have a custodian to do the safekeeping of the assets, whether it is cash or the underlying investments. Title the same is then held in a bank, and then you have a trustee. So that's the unit trust fund. And for Britam, we have three of them: the money market fund, the umbrella fund, and then the fixed income unit trust fund. Now, when it comes to the wealth fund is a discretionary arrangement where a customer or an investor allows us to invest their money through a custodial arrangement. So we'll have the powers of attorney granted to us in the application form, and the money is deposited in the account, and the fund manager is able to proceed to go and make investments again in a blanket or in a pooled fund. So the difference is that the similarities between the trust funds and the wealth fund, again, you see that there's a pooled fund, because money is being pulled from investors, and then it's invested with a common objective, and that structure is governed by a custodian and a fund manager, and then the fund manager has a powers of attorney trying to take those decisions. The difference is, however, is that the wealth fund is not organized under the collective investment schemes environment. With the advantage of being under the collective investment schemes environment, you then are benefiting from the regulation from the CMA that allows for the tax exemption. So where you see tax exemption, you see tax exemption in the fund. So as a business, one of the reasons why we thought it was very important to then have a fixed income money market fund, we saw an opportunity to transport the features of the wealth fund to have the same in a tax-free environment, and have that organized under the collective investment scheme. Hence the launch of the Britam fixed income UGX Uganda Shilling Wealth Fund to unit trust funds, and try to incorporate the same features of certainty, fixed returns, which is again what you see under the wealth fund, but then have the same in a tax-free environment. We're also undertaking a similar process to move our USD wealth fund again to benefit from the same structure, just like the Uganda Shilling Wealth Fund transition, and is now benefiting from the tax benefits of the collective investment schemes environment. So that is the difference, but also we've been able to appreciate the similarities, given that there's a pooling of funds from investors with a common investment objective. What are the risks of the money market fund? Ideally, because of the investment environment, the risks are really market risks, given that the performance of the money market fund is then subject to developments in the market. So to the extent that interest rates improve or reduce, that's the risk of the money market fund. If inflation escalates, again, the reduction in disposable incomes and the tightening of financial conditions will certainly impact the money market fund. If the currency loses value, the Uganda shilling, and that creates imported inflation and the pickup in rates. So those are some of the risks of the money market fund. Because of the fluctuating nature of the fund, rates go up and down. And that's the key risk. However, as the fund manager, our duty is then to ensure that we come up with a robust investment strategy that then carefully examines these risks and then guides the security selection or the investment of the underlying assets. So, for example, when we see that rates are going up, we then position the fund to benefit from increasing rates, for example, by investing short term and then having fund to be able to ride the curve and benefit from a pickup in rates. If rates are going down, again, in terms of investment strategy, we'll then lock in low opportunities. So as opposed to, for example, investing in a Treasury bill, you then pick up a 5 or 10-year bond so that you're able to lock in good rates to mitigate the risk of a decline in interest rates, which could affect the performance of the money market fund. If it is inflation, again, I've mentioned inflation is averaging upwards 7% in 2022, and then between 8 and 10% next year. So the goal is then to, again, position investment strategy to ensure that you're having a real return above investments. And then what happens on the investment side, we took around the choice of investments to only pick up substantially those that are yielding above inflation, protect against that risk. So those are the risks of the money market fund, really the market environment to a large extent. Business, we are regulated. So in governance, we have a board that looks at those aspects that can bear on risks, and also have a regulator that conducts on-site and off-site inspection to ensure that there's investor protection and so that the customer is treated fairly, certainly with the opportunity to complain as and when the customer feels that the service provider, in this case Britam, is not treating them fairly. What protection do we have compared to the deposit protection fund that allows for 10% per account? First and foremost, I've mentioned we make the investments and then the money is held on a bank account, given the custody role of a bank. In our case, we have Standard Bank providing custody support for the money market fund and umbrella fund, and then we have Stanbic Bank again executing the custodial function for the Britam fixed income money market fund. So because the money is held in a bank, the title, the securities again held by the bank, the then again would benefit from the limit of the deposit protection fund because then money is held at that level. However, under the CMA, there's the investor compensation fund that's also in place for investors in the event that there are losses rising out of breaches to the investor protection mandate or the market players. There's that fund and that is maintained by the CMA. So our investors are able to benefit from the CMA Investor Protection Fund, but also because our money is held by a custody bank, and they're also able to benefit from the deposit protection limit of 10 million. I'll now let my colleague answer the other questions.
Thank you, Ronald, and thank you to our members that are still on the call. Yes, so just to answer some of the questions that came in that are investor related. One of our members, Susan, asked, how do you buy and sell shares or stocks of a company? So through the products that you would invest in for Britam, under one of our unit trust products, you're able to have exposure to these equities indirectly. Of course, that is a safer way to invest. But if you intend to invest in equities directly as an individual, you would have to go through a stockbroker There are licensed stockbrokers within our market. There are quite a number that are licensed the Capital Markets Authority and have the capability of buying and selling these stocks. Just a quick way in which you do this, you'd open an account, which is normally called a central depository account with the government, with the Uganda Securities Exchange, and then you are able then to buy shares, and they're kept within that exchange. We also got a question from Norman, who said, can I use Britam to help me invest on the New York Stock Exchange? Yes. So currently we have products that are under the Kenyan structure that allow you to invest in offshore investments. And with those offshore investments, you can invest in the New York Stock Exchange. But in Uganda, we have a bit of a limitation on offshore investments currently, so we cannot do that directly. We've also got a question from Herbert Tumukunde that asked why is it financially sound companies like Umeme, MTN have very low share prices, actually below their IPO. So maybe I'll spend some time there. So as I had mentioned earlier, equities is an asset class that we are invested in, that we have quite an amount of professionality in it. And this is because we have been tracking some of these companies for over 20 years. On the Kenyan side, on the Ugandan side for a little bit less, but since inception or since all of them IPO'd. So for the Ugandan market particularly, we do have to mention that there is quite a bit of leg room that needs to be done when it goes to equities. One thing that we have realized within the market is that there is a lack of knowledge on how these products work and how beneficial they are to the market. So what that has done, it has created a bit of a lag in terms of our markets. So unlike in Kenya, where you have Safaricom, KCB, Equity Bank, those are the biggest counters, and those are traded on a daily basis at huge amounts. And you also see the stock price moving in tandem with the performance of these particular companies. So for example, when Safaricom performs very well, you actually see its stock price going up. When KCB, when Equity Bank goes up, because there's a lot of trading going on of counters. On the Ugandan side, what we have realized is, one, a lack of liquidity. So we don't have a lot of participants actually taking part in the equities buying and selling. You normally have a lot of institutional players that include fund managers, offshore players, foreigners who come in and buy, and normally they hold those counters. So by holding those counters and not taking advantage of the movement in prices, we normally don't see these counters moving as efficiently as they should. So a good question was asked about Umeme, MTN. For MTN, it was undersubscribed. That means that they did not raise all the money that they intended to during the IPO. IPO being an initial public offering, that is the, by definition, that is when a company goes public. So since they went public in November at around 200 Uganda shillings, they're now averaging between 180 and 185. And that was majorly because of the underperformance in terms of the IPO, but also in terms of that confidence within the company. So what we expect is, as they continue to post good performance moving forward, then that will then translate into better dividends or better returns and profits for the members who are invested. And then we should be able to start seeing value in the shares that we have. So if you're currently a shareholder of MTN, what we're hoping is that eventually you'll be able to sell your shares at a higher price, because somebody will be willing to buy it at that higher price because of the potential of the company. But currently, specific to just Uganda, we don't see a lot of price movement, mainly because our markets are illiquid and we don't have as many participants. So that is one reason. Well, that is the major reason that equities have not been too attractive in Uganda. But within the region, there are quite a number of opportunities, and we have seen a lot of value from that. Let me see. There was another question on the best diversification portfolio mix. This was from Ovia Karunji. So I mentioned quite a number of things. And one of the main things, quite a number of things in my presentation, but one of them was diversification. So we normally encourage you to have safer interest-bearing assets as your larger portion of your investments. So these are the fixed income assets. We normally encourage you to have that as the largest piece of your pie, because these are stable returns that you will be getting, the continuous growth, and also you're able to access cash. We recommend a smaller allocation, obviously, to the equities that are higher risk. So that is also associated with the amount of risk that you're willing to take, and then a very minimal amount to be held in cash. So the reason why I'm not giving you particular percentages is, again, because of that first slide that I mentioned. Everyone is different. So we as Britam, we make sure to cultivate an investment profile for you as an individual. So when you come in as an individual to ask for investment advice, we're going to ask you all those questions that I asked. What is your investment horizon? What is your appetite, your risk appetite? How long do you want to invest for? How much do you want to invest? What is your return objective? And once we are able to collect that information from you, then we come up with an investment profile. So I have just given you a generic overview of where you should invest, but as an individual, I'll be able to fine tune and tell you exactly how you should invest that will meet all of your objectives. So that would be the best diversification portfolio mix. It is based on you being able to answer those questions. So what we always encourage you as our retail clients to do is to be able to ask yourselves that, come ready with some of those answers that we have asked you, so that we're able then to cultivate that investment profile for you and come up with even suggestions on products or avenues where you can invest specifically. We have quite a number of products, but picking the right product is also quite key. I think those were all the questions that were asked on the investment side. I'll just hand this back to Hillary to answer the questions on the products. Thank you.
We can't hear anything.
Sorry about that. I think I'm not unmuted. Like I said, thank you so much, Vernon and Ronald. I'll take the other section of the questions. I will take 2 questions myself. Ronald, I will be taking one from Timothy Wama. I'll read it out loud. So this is from Josephine. How much do I need to start with to invest in the unit trust fund? What are the returns on investment? What are the requirements? So how much do we need to start investing in the unit trusts? It's just 100,000, and the minimum top up you can make is 50. But it is also important to note that it's really a game of numbers. The higher you invest, the higher the returns. The beauty is that we allow you to put a regular investment in the fund. These are the top ups from time to time so that you can grow your portfolio over time. What are the returns on investment? Currently, we are returning an indicative average annual rate of 11%. This is not fixed. It can increase, it can go low according to how the markets are performing. What are the requirements to start investing? We have an application form that we give to you so that you can complete. We shall require you to attach a copy of your national ID and a bank statement. Then you're also required to send your investment money to our custodial accounts in Standard Chartered Bank. When we have the documents and the proof of payment, we proceed to set up your account and, of course, credit. Then we go ahead to give you what we call a contract note. This is in confirmation of receipt of your funds and commencement of the investment. Then onwards and upwards, we give you statements that basically show the transaction histories. That is, if you've been, actively engaging in terms of withdrawals and top-ups. It will also show that the performance of the investment in terms of interest earned on a monthly basis. Then it will also show you the balance recently at that. Caro and Namanya asked, are there penalties for missing a monthly payment? Yes, like Ronald highlighted earlier, we allow regular investments to be placed in the fund. These are top-ups, and the minimum top-up you can make is 50,000. Now, these top-ups are not mandatory. You only save as and when you have the money and whatever much you have. So Ronald, you can take Timothy Wama's question. Do you have an online portal where one can see or have visibility of the account payments at any given time?
Thank you, Hilary. We have an online portal that is soon to be launched. We expect to launch the same before end of this month. Currently, we are going through testing with selected customers to be able to share their user experience. But I'll just spend some time on the features of the portal. The portal is both a website and a mobile application based. So what will happen is that whether you're using your computer or your phone, you're able to view your statement to really appreciate the performance of your investments. Yes, we know that unit trust funds provide daily income, so you're able to see that on a daily basis. So every day, able to check, see, given how the market is performing, what rate has been declared, and what does it mean in terms of the actual money coming to me as per the statement. So you'll be able to do that. Secondly, the portal, both mobile and website, allows customers to be able to raise service requests. So, for example, you're able to go through the portal and make investments. You're able to go to the portal to put in a request to withdraw your money, also to make a request for a top-up on your investment. At the same time, other queries can also be raised to the portal. For example, if there's a complaint, if there's information that is required, the same can be obtained from the portal. So this is something we are really excited about. At the annual general meeting for our unit trust funds, we mentioned that there's a launch coming up. Obviously, we are running late because we are expected to go live on the 15th of October, but that has then moved to end of October. We felt it was very important to have the testing with our customers and really incorporate the feedback. So that really delayed, and now that is happening. We incorporate the feedback, and then we'll be able to go live with the mobile portal, a mobile application, and a website portal. And we believe that with that, we'll be able to serve you better. But also, this is something which the business has been working on for some time, benchmarking what's available in the market, given how our peers, their portals look like. And then obviously taking into account international best practices to ensure that we can have a robust portal which can give our customers a seamless experience and a good customer experience. Hilary, I'll hand over back to you.
Thank you so much, Ronald. I would like to take the same opportunity to thank our guests for being in attendance today. And I think I'll also call upon Ronald to come back and give closing remarks as we close. Otherwise, thank you so much. Ronald?
Thank you, Hilary. And our investors, esteemed clients, and everybody on the call. Again, mine is really to thank you for the time you spent with us on the online workshop, going through the major topic of the day, which has been investing in the tough economic times. We've certainly covered much ground on the developments in the economy, on the opportunities available to you, and we hope that really the number of takeaways from this presentation we'll be able to share with you the presentation, and we'll continue to take questions. So you're able to reach out to us whether through a general email, but also we'll be sharing with you the personal emails of the presenters, so we can have a more engagement going forward, either through email or the phone calls. We'll be happy to engage with you, because as I mentioned, it's always our pleasure to serve you, and so it's our pleasure to see that we are providing financial security every step of the way with our investment and protection products. So thank you for the time that you've been with us, and again, we really value the relationship we have with you, and we commit to more engagements with yourselves, and more communications will be coming out in terms of further workshops that we are planning, including physical workshops that have been scheduled, but also other engagements with yourselves. Specifically, I've mentioned we'll be having a launch of the customer portal that will allow you to invest from wherever you are, that will allow you to make various requests. So we'll be sending out that information, and we hope that the same will be well received. Having said that, feel free to pass by our offices at Plot 4 Kibua Road, just before Nakasero Hospital, and right opposite Emin Pasha, and we'll be happy to welcome you and to host you at our offices. Thank you very much. Please provide us with their feedback in terms of then how we can improve these sessions going forward. Thank you very much, and allow me to wish you a very good day and a very good end to the rest of the week.
Thank you so much, Ronald, Hilary, Bannon. It has been a very good presentation. We hope to hear from the rest of the team later on. Thank you. Blessed day.
Thank you.